Sorry, I tried to get up and pick it. Last minute. Sorry about that. What must be? All right, guys, welcome. Without wasting any time, I'm going to get started. All right, so it's been an interesting day. Okay. I know that the market has been very strange, but we move anyway. We keep on moving. So I want to give you guys a really good breakdown, and let's have a look at what the price is doing. Now, I have a video coming out that I'm going to be posting to you guys in a moment. All right. I'm just trying to put out the information for it. Now, I've spent some time to do a very deep breakdown about how institutional price action, intelligent price action, whatever you want to call it, how it happens in essence, right? So me doing that requires me to upload the video, which I will do. I'm going to be uploading the video today. Aside from what I've got going on with the session or with the situation with our normal sessions, which is going to be released around about 8 o'clock today, right? Our market view watch, which I call the game plan series, is episode 9 right now. So I'll be going through all of those things later on. All right. So I'm doing some announcements. I've got quite a few videos to give out, so I'll be posting a bit more videos as we go along. All right. I have got my first withdrawal from my prop firm account, so I'll be doing a review. What I'm thinking to do was, before I do a review, I want to get one more withdrawal first. Once I get that withdrawal, then I'll do a good review, because it will show a bit more consistency with this prop firm I'm using. And then we can actually see what's happening there. All right. So anyway, without wasting too much time, let me get on with it. Now, if you guys, I won't be too long, but I'm just trying to buy a little time so that everyone can jump on and everything. So if you see me taking a bit longer, I'm just trying to make sure that everyone has a chance to get in. All right. That's my main stance. Okay. So that's the key to making sure everyone gets in, just giving you guys a bit more time. But anyway, let me get started. Okay. Just give me a second. I have so many things that I'm running in the background, so my laptop's slightly slower, but we move anyway. Let's go. All right. So we know from the analysis that we have a zone that we're looking at now. This is not the one. This is the one here. So this is our analysis here. This has been the key kind of focal point for the week, has been this range right here. Okay. So as a recap, we have this strong break beneath here, this demand order block, right? The price started to pull back up. all right, which is what I was expecting. And then until the idea was for the price to pull back until we reach this area right here. And this area right here, all right, is for some called an FVG. I call it a validation point or a VP. So this validation point right here is where the price reached to. And then we had the initial sell-off. Now this sell-off was fantastic. We had the close beneath many lows, including the body of this candle here, which would be the open price. Now, the price at the moment has actually pushed up further than this area. So it seems as though the analysis has become invalid when that's far from the case. And I want to go for exactly why. Now, what was the trigger for the price to push this long out? Let me just go over here and show you. Now, I'm going to get a completely blank chart right now. So I'm going to delete all of that stuff. And I'm just going to go to the H4 and show what's happened. Let me first put the daily zone back where it is. All right, so this is the range here. And let's go down to the weekly. So on the weekly time frame, one of the things to note as well is that this low right here was also the low of last week. Now, if I drag a line over here, you'll see exactly what we've had going on all along. So if I zoom in a bit more, we can take a picture of our mental of what's actually going on. So the initial thing here is I want you to all pay attention to this because this is a key part. This demand order block over here, and I'm going to change the color so that you can see where I'm looking at. Let's go over here. So we have this demand order block over here. All right. Pay attention to this guys, because it's an important recap. All right. And if we follow the candle one by one, so this was the order block responsible for the liquidity up to this range, right? Then we see the price pulling back down, which is what was expecting. Now, when the price does that movement, this candle right here was an important signal that there should be some continuation of bearish pressure going on in the market, right? This was a key area to look at. Second thing is if we look at the next candles, we see the price starting to pull away from the zone. Now, the deciding factor of what the price was going to do next, okay, and this is key, is that this candle, because right here, and I'm going to have to zoom in even further, when the price breaks an order block, so a demand zone, I call it a flip zone. The price flips the zone. Now, others may call it maybe a mitigation zone, which is in the same kind of vein, which if you took a sell when you're supposed to be buying here, you know, based on the fact that the price is selling off majorly, and you put a sell here, then the price goes away from you, then you get an opportunity where the price comes back to a point of break even. Then what you would do is you would close your buy at break even if you didn't chicken out, and then you would take a sell. And you initially be in profit for a little while and capture the rest of the movement going downwards after this return here. So this was the return entry signature. When the next H4 candle was the deciding factor of whether the price is going to continue going short or actually go up for a long. Now, how would we know the difference? Well, if the body of this H4 candle had closed beneath the weekly low, that would have been a sign of continuation to go short. But what we had within this 4-hour range, and this is why I always say that you should always wait for candles to close before you make a decision. Never make a decision on a candle that hasn't closed yet, no matter what time frame it is, okay? Always wait for the candle to close first before you do what you need to do, okay? Because many times you could get yourself in situations that you don't need to be if you just waited a bit further, or a bit longer, I should say. Let's be more grammatically correct. So if you look at this candle here, this was the deciding candle. Now, I don't want to call it a decision candle because that's not the teaching that I go down or the vein of teaching, and it might be confusing. But this candle in this circumstance was the deciding factor of what to do. Again, if the H4 body, so if the body of the candle closed beneath this low, right now price would be pushing further short towards that short-term target that I have before we have a major long. But what we had at the end of this H4 session, which in UK time starts at 9 and ends at 1 o'clock, the body of the candle actually closed above here. So at that point, it doesn't mean I would have taken a buy, but I would have been a bit more cautious because now the price is wicked beneath the low of last week, which means that any stop losses or sell stocks that were beneath it have been triggered, okay? And if that's the case, then any of the selling that happened up here, the sales have been closed out from smart money down here or intelligent money down here. And as a result, now we've had a major long. Now, is this the end of the world? And is the price in recovery right now? Well, you're going to find out. Now, how do we know if the price is in recovery or this is just a deeper pullback? first thing that we've got to do is go back to the higher time frame first. So what I'm going to do, I'm not going to use my markings here. I'm just going to go through this area here and start from scratch. All right. Now doing this, and I'll put this over here. Doing this right here, we get an important situation going on. Now notice that even though the price is far above this area right now in terms of where the closing price may possibly be, which will be the current price, this is a daily candle, which means that we still have just over 7 hours until this candle closes. Or actually, in this case, because we're looking at the dollar index, we actually have 6 hours because UK time, it shuts around about 9 o'clock. Yeah, the candle shuts at 9 or even if it's 10. So just 7 or 8 hours, one of those situations. But until market close of today, in essence, right? Whenever that is right now. I believe it's 10, but it could be 9 as well. We'll find out. I believe it's actually 9. But this candle here hasn't closed. So even though the body of the candle is above this area, which will signal a continuation, and then that would be a recovery movement, we can't 100% say that we'll recover just yet. Because if the body of this candle closes, and I want you guys to pay attention to this because this is so important. If the body of this candle closes back within this area and we just have the wick outside of the zone, then we're still going to go for a short. Okay, so what would that look like? It would look something like this. If I was to mimic the candle and just draw like a blue little box here, right? If I mimic the candle as it looks right here and did the same thing, what that would look like, okay, is this. So candle, I'll start from the candle's same open, all right? So the candle ends off the day looking something along the lines of this. Then I'm going to take this line here and make it black so that I can represent the wick. So black, not none, black, and a wick. Straighten that out a bit. Yep. And if I just do this here, and I zoom in a little bit over here. So now I don't like when the price does this because then you're going to have to move around and you can't really get it. There you go. So I'm going to do it like that, make this a bit smaller and put this in the middle somewhere. Now it's not letting me get it straight, but I think you get the point of what I'm trying to do. So I'll just do it like this instead and just put the wick somewhere here. All right. Now I don't know why it's annoying like that. Sometimes you have to really fiddle with it so that you can get a center point like this. This is what I'm trying to do. And I'm going to go back to the D1 now. Let's see what happens. All right, so now drawing on MetaTrader, I think is probably one of the most annoying things. And as I said, I will be using TradingView sometimes, but I wanted to stick to MetaTrader because I put the analysis there, but there's no problems with me doing it on the other platform. All right, so TradingView. All right, so it doesn't want to make me have a wick, but in essence, what we want is something that looks like this. My one's a little bit weird for whatever reason. See if I can just get it to go here. Yes, strange. This looks funny, but you get my point anyway, guys. We want the wick of the candle to be something like this. Now, this is not how a candlestick looks, so don't laugh, all right? But we need the wick of the candle to be outside of the area, but the body inside of this zone right here. All right, that's the key. All right. So that if we have it like that, all right, and the body of the candle stays within this area, by the time it hits 9 o'clock UK time or market close, wherever you are watching from around the world, then what this will signal is actually a continuation to go short. Okay, because that will mean the body of this candle is still respected, the range is still respected of the price for bearishness. And then we can go down to the short-term target, which is going to be down to the next order block down here. All right. So I'll put this back to the normal color it was so that we can work with it. Right. So this is the idea that I have now. The other side of the story would be, as you guessed it, if the body of the candle closes above, especially if it's the body of the candle closes, you know, at the midpoint, if the midpoint of the body ends up being at the edge of this zone, if that happens, right, then what we will have is a major continuation to the next area of supply. Now, where is the next area of supply? The next area of supply would be in this range here. Now, because the last candle before the price blue color, it's not kind of my favorite one to use. These highs right here look from a sell from that range. We could actually do that now, because if we take from swing high to swing low, and we were expecting the price to come back up here, for example, then it would be coming back to an OTE range. Now, there's no order block here, so the next level will be 78.9 or 86, which will be within kind of like the range of this supply zone. 86 would be like the midpoint, 78.9 will be the edge. All right. So somewhere around here, with these highs being taken, is a good enough signature to bring off another sell. All right. But that all of that is going to be dependent on the fact that the price has closed above this area. Now, we don't know that yet. And there's two sides to the story. It could happen where we get a deeper push up before a sell, or the price can stay within this area with the body close, and then we go down for the final short before a long. All right. Now, spending a bit more time on the dollar index because it's important to do today. I'm going to do something here. I'm going to get a dollar index chart one more time. And let's just look at this from the H1 view now. So on the H1, let's take a look here. The H1 that we have over here, this is a key zone that I would like to, have a look at and see what the price is doing. Now on the H1, look at what the price has done. We had a very strong liquidity void, and this massive move that we've had happen, right, in the London session has filled out the entirety of this liquidity void now and come back into the supply zone order block. All right. Now, in a situation like that, the price has actually made some efficiency from this H1 standpoint, right? Even though the price used this flip zone pretty well, the price stayed within here really nicely. All right. What we in essence need is to see when the price gets back down here. Now, a good way to know on an hourly basis rather than on a D1 basis, because the question will be now, well, I don't have all day to wait to know what I'm doing. Is there a way to know a little bit quicker? Well, yes, there is to a certain degree, and I'll answer that for you. So if I take this D1 area, I'm going to close this off so that it's not in the way. If we take this D1 chart, right, and let's look at the price points that we've got. Now, I'm going to use the crosshair tool in the bottom right so that I can get the exact price points for the body of the range. Because what we want to do is if we can find any key order blocks on the H1, all right, key features of price within this range that the price can reach to and breaks beneath especially, then we can have a kind of clue that the price probably is going to stay within the range, all right? This is a way to know slightly quicker. So how do I do that? Well, first we need the top of the range. So I can actually do it from here. I'll just go to the D1 really quickly. And I'm just going to take the top of the range. Up here, the close of this candle, which would be the bottom for the bearish side of the market, is 102.033. So what I'll do is I'm going to put 102.033. Right, yeah. So that's the close. All right, now the open of this bearish candle, which will be the top of the body, all right, says here 102.292, which I actually didn't accidentally got that on point, but hey, it can happen sometimes. Now, when I do this, let's look at the order blocks that we have here. Now, we have a major key area, which was a H1 flip zone, right? And this H1 flip zone is directly at the edge of this order block, right? Now, ideally, we don't want the edge, but what we can do is we can analyze to see what features of price are here that the price may want to be attracted to and run. Now, immediately my eyes go over to these 4 candles over here, which have almost a perfect trend line. So this right here is engineered liquidity, right? Definitely. This right here is engineered liquidity. This is liquidity that the price is in too perfect of a range. This is not price action that's controlled by or the natural price action from buying and selling. This is unnatural. This is an engineered, okay, trend. Now, the correct term for this is actually a buy order aggregate. Okay, this is a buy order aggregate for anyone who's looking at this. So this buy order aggregate that we have over here is somewhere where there will be liquidity and the market will be attracted to want to run to, right? Over here. So let's put a little line somewhere here, right? So with that being said, with that buy order aggregate situation, right? What can happen? So if within, and this is before market close, if we get one close here, so how I'm going to do this, I'm going to mark them as closes, right? So close number one, if we have a H1 body close, I repeat, if we have a H1, let's put this here, body close beneath this area, close number one, then that will be sign number one. I would say two closes would be a great confirmation. Even if we don't get two closes beneath, but we get one still, and it's still within the range, then we're good. But if we get two closes, then we're looking good, right? So close number one would be beneath this flip zone area here, all right? So close one, right? The next one would be close number two, which would be to close beneath. Now, it doesn't actually have to go at the beginning of the range because we have a supply zone, right? Pause, push down all the way here for a short. So created a liquid. So really all the price needs to do is at least get back to the other side of this, which will be here, close number two. So if we can close beneath, all right, the end of this buy order aggregate area here, then, and this is before the price gets to 9 o'clock today. If we get these kind of closes today, right, then we know for sure, without having to look at the market, that we're definitely going to end up with a continuation, all right? Now, for me, the way the price has actually taken off at the time it's taken off is already abnormal. I wouldn't expect there to be so much liquidity coming into the dollar index in the London session. I would expect the US session to really have done the work there. Okay, but we have these sharp pushes here and the price specifically went to this order block here, which is pretty fine, okay? But now we're getting towards 3 o'clock and the liquidity in the market now specifically, now the reason why the dollar index closes at 9 o'clock, okay, is because the last time or the market close compared to UK time in America is 9 o'clock. The market close of all financial markets in America close at 9 o'clock UK time. So this is why the dollar index will close at UK time, because Chicago, I believe, closes the last because it's furthest to the furthest to the right or furthest to the east, okay, compared to New York. Or yeah, so that means we'll shut at 9. So at that point, we know that at market close, that's where we are. So we have, in essence, if you're watching from the UK or anywhere else now, we have 7 hours left. So there's basically 7-hour candles, hourly candles. After this one is formed, there will be 6. We have 6 hourly candles, if we ignore this one, left for the price to make a decision on what it wants to do. All right. So there needs to be in the next 6 hours a heavy amount of liquidity to push the price back down here. If that doesn't happen, then we definitely are going to get a continuation. All right. Now, what does this mean for price action before I let you guys go? Well, I'll tell you. Now, first thing, we looked at this yesterday. You can see that pound USD has actually come back down to this area now. But this spike here that we had caused by the pound news interest rate hike, the price took all of these highs apart from the weekly high and has gone short so far. Now, if we do, and this is a if we do have that dollar close I'm talking about back into one of these close ranges here, then I would expect pound USD to be finding a way to go for a long at some point, okay? Now, the pound seems to have its own fundamentals too of some bearishness. It's not that the bearishness isn't that strong on the pound, because bearing in mind, if you look at the candles here, when the market was making its way up for a long, you can see that there's hardly any resistance towards buying to the left, right? And I have lots of zones marked out here. So what I may do for the sake of you guys is I'm going to delete all of this stuff, right? And just mark out, keep the rest of what I had going so that there's less less noise. Okay, but if I start from the D1 quickly, you can see how easy it's been for price to push for a long, hardly any resistance towards buying, right? But as soon as the price comes onto the sell side of things, notice that there's a lot of difficulty. You know, this one bullish candle here is almost equal to the length of these 5 candles here, right? So, and they're not even bodies, they're really wicks, but this is a full body. So it's very obvious right now that the pound is very strong against the US dollar for this moment in time. And all the price really is trying to do is find this next area of liquidity. Now it's already filled out a daily FVG, daily validation point right here. But there is one more though down back over here in a really nice area too, because it's beneath an order block, which is over here. All right. But also it's in a flip zone, which is right over here. So if I draw this across here, there's a supply zone, which is acting as a demand zone at the moment because price is broken above it. So if the dollar was to gain strength and do the continuation long and go up further, then that could give the pound a reason why it's pushing down short to the next FVG or D1 validation point, right? The other side of the story is the price may just stop off here. And if we are going to have that continuation for a short on the dollar index, then we should be looking for another long. Now, taking this into perspective here, you can even see it more clearly here on the H4 that the price has done quite a few pips, don't get it wrong, quite a few. 1,400. Okay, so 140 pips, which is not bad, or just a bit more than that. All right, but you can see that there is a very struggle kind of move situation going on. Price is really struggling to get that bearish pressure in to push the price further. But of course, the pound news did help to run some sell stops above, you know, all of the highs that of this week so far, which would have had additional liquidity in it to allow us to go for a sell. All right. So with pound USD, I expect the price to push short and maybe fill out this lower down validation point. All right. And give us a sell. So that's my view. But it will be dependent on the dollar index as well. But even without it, there's a very obvious liquidity gap that does have to be filled, right? So that's what I'm looking at. All right. Now that you have that in your mind, let me look at Euro USD. Now, Euro USD, there was some very negative Euro news. And it's actually allowed Euro USD to get and fill out its own liquidity void a lot quicker. Now, it looks like we have unfulfilled deficiency immediately because if you look at this order block, I've even involved a tiny little wick here. Excuse me. And you can see that the low of this candle hasn't actually gone back into the area of demand before pushing up for a long. So this means that the price will come back down again at some point, probably on Monday, and spike this low here before going for a long. Now, what will make this more significant is if this is the low of the week. Now, I don't actually know. I don't think it is. Okay, it is actually the low of the week. All right. So that being the low of the week, that makes it an even more fantastic candidate for us to have a very strong long because of this movement here. Now, the same H1 area that I have marked out, if I was to superimpose the H4 version of that area of demand and draw it along here, it gives us a nice little range of where we should expect the price to go. Now, one thing I do like about MetaTrader is that if you put one color over another of the same color, it leaves you a white spot or white space. Now, if I use a different color, it gives you like a special color that of a mixture of the two. Now, if I put blue and red, should give me like a purplish color. Now, the colors are not exactly, you know, 100%, but it can work out. I'm just going to try and find the color that can work, or I might just use an empty box. I'll keep this here. Let's just try and see if we can find something that can work. All right, so I'm going to put this here. All right, here we go. That's a good example. So I've got orange and turquoise. Now, if I do that now and I go back to the H1 and we look at where the price is, so it's H1 here. So I'm going to draw something here. So on the H1, the H1 zone is the one in orange, yeah? So I'm going to just fix it up a little bit and put that right. So all of the area that is in this kind of grayish color right now is the H1/H4 cross section, okay? So H1, H4 demand cross section. And all that really means in very simple terms is that this range in gray that I've written out here. And let's get this going. Okay. Let's make it 14. So what we'll do now is that since this low is the low of the week, right? And we've been selling for basically for 2 days now. So there's a lot of liquidity voids being formed. What we need price to do for Euro USD is pretty simple. The moment the price gets into this cross-section area, that would be a stop hunt of the previous week. All right. So weekly stop hunt. That will be enough of a trigger to give us a very dynamic long and push us all the way back up here to a fantastic movement long right here. All right. So this is what I would say for Euro USD. It is going to be our fantastic movement. And I'm glad I did this analysis with you guys because this is going to be one of the first trades I'm looking to take. Now, in this series that I'm going to do today, part 9, I'm going to develop this information further. And we're going to take some further looks at what goes on. But for me, Euro USD, I think is probably the highest probability pair right now for the long compared to Pound USD. I like it a lot more. All right. I really, really do. All right. So let's see what we've got. Now, Euro USD was my top pick. Let's see what other pairs we can pull out. All right. Before I go. All right. Let's see. So AUD USD has pulled back quite far. Now, the initial zone that I had marked out was for the price to return here. The price is really broken strongly past that area. All right. Now, there is another supply zone range that we're in right now. And from the looks of things, what I do think AUD USD is trying to do. Now, initially, there was the weekly low I expected the price to go to. Now, it looks like what the price is doing with AUD USD is to find the next available fair value gap validation point range, which is at around 66,490. Okay. Now, if I wanted to be exact, I could just kind of hover over and find the high. The high is 66,381. So I'm a little bit over on this one. So 66,381 will put me right onto that high. And then we can have a look. Now, this supply zone is another flip zone. Prices have broken above and returned to the other side. I do believe with AUD USD, there is one more long left before we have the major short that we should be all expecting. All right. Now, bearing that in mind, if I go to the D1, let's look at what the price actually has going on. So on the D1 time frame, things are immediately a lot more clearer. And I'm going to take this orange area off because it's hurting my eyes, probably hurting your eyes too. So the price has dropped into demand, which is great. Let's change that immediately to this color. Yeah. And this order block here is derived from supply to the left. That used to be a supply zone, but now it's a demand zone. We could actually cage it a bit further and just use, and I'll do this here, just this area here. If we just take the top supply zone in this case and put this right here, this is our range right here. Okay. And then after we've got the high right here too. Now, with that being said, since we've had such a major move, the price has gapped down several times on the way back after the stop hunt being triggered here. All right, for a sell. My best bets is that this movement here is not the final short. What I do think the price will do, though, is that coming into next week, it probably will stay in the same area because it's pretty liquid to continue going long. But we're going to have some sort of spike probably down to this fair value gap right here, which will also take out this low. And then from here, we should be looking for a long. So what this will look like is we'll have a wick down, but the body of the candle, whatever candle is formed on the daily, would stay above this range. All right. That's what I'm expecting. So it looks as though the price is pointing towards a reversal in strength. And we can actually map this out because although I'm heavily bullish on the dollar index and bearish on currencies, I do see the need that the price would want to find its footing to get back up a little bit before the major short, and a little bit is relative to how far the price will really drop. Now, at the moment, the price is at equilibrium, which is another great sign. We're at fair market value for the price, or fair market price. Now, it's not necessarily fair, but it's just what we call it. If it's truly fair is another question for another day. But it would make sense now that if the price was to touch this monthly fair value gap right here, monthly validation point, by touching at this area and filling out the gap that was left behind. And then also what this will look like too, which is great, is that the price has dipped back into discount regions in terms of buying, even though it's not I call it expensive discount, but it's not the cheapest discount you could get. The cheaper ones would be, of course, OTE or 78.9, etc. But it's still a discount anyway. So the fact that the price has actually done that movement right here, it should do that movement, was what I expect it to do. If it does that movement, we'll have a quick moment of time where the price is below equilibrium or within discount pricing, okay, in this trend, which would be another buying opportunity for smart money. At that point, once it dips in here, which I don't believe will last long, it should cause the price to stay here and then completely take off and push the other way. So I'm actually expecting some weekly reversals for all of these pairs back up long coming into the week starting would be the 26th. Okay, so excuse me. Now I've said all of this information. What can we do? Well, I know there's very clear reasons why the price has to go for this long, and all we have to do is literally wait for that situation to happen. Okay, so my top picks right now are AUD USD and Euro USD. I think that those two are pointing towards the same direction without me having a bias, but are also lining up to be really good trades. So I want to line them up together to make sure I keep them there, because if you want to know what I'll be trading, it will be those. Okay. Now that you know this information, what does that look like with the dollar index to finish off? I think these two pairs are enough. I don't want to go crazy and go through every pair, but I think these two high probability price action analysis here would be more than enough to get the job done for your account, right? So with these two pairs, what does this mean? Now, if the price has to pull down further short, it means that the Australian dollar is losing strength and then it's going to gain strength, which means, and what that would look like is the dollar index will become stronger and then become weaker again. So when you put that into perspective and we look at the dollar index, what it's doing, that would mean the price could still close in here, but that would mean in the sense that the dollar index will go long and then go short immediately after. And this is where we need to wait to see what happens here. Yeah. So I hope you really enjoyed that. I'll do all of the news outlooks and the price action later on. Okay. If you have any comments, leave them beneath. All right. I tried to make sure that I set this up for you guys already. But of course, episode 9 of the series that we've created, the game plan series, will be released later on by 8 o'clock, approximately 8 o'clock. Depends on the upload time of YouTube. All right. So I'll catch you guys all later. Everybody take care and have a fantastic weekend. All right. There's still opportunities to trade and scalp here and there, but sometimes in the market it's great to be an observer too. All right. So stay tuned for more. Everybody.